Global markets are bracing for further escalation after Trump's deadline ends on the 6th of April, now extended to the 7th of April, 8 p.m. Eastern Time. Well, energy prices have surged sharply since the conflict began. Crude oil has risen between 40 to 65%, now trading well above the $100 per barrel mark, while LNG prices have jumped nearly 60%. European gas prices are also up over 70% from pre-war levels. And markets are already under stress, but they are still pricing in a contained conflict, not a full-scale escalation. Three critical triggers are driving the global price surge. First, the oil and energy shock. Disruptions in the Gulf region combined with attacks on key infrastructure. Again, in the Gulf region, they are tightening crude and LNG supplies, and this directly feeds into transportation, manufacturing and inflation globally. Second, the power and industrial energy shock. Rising LNG prices are pushing electricity costs higher, especially in energy importing regions across Europe and Asia. This is also impacting industrial production, including petrochemicals, plastics and even semiconductor supply chains. Third, the food and industrial supply chain shock. Higher diesel and fertilizer costs are beginning to feed into agriculture, while the impact on food prices is still lagging. It is expected to build over the coming weeks. These interconnected triggers are creating a broad-based cost escalation across the global economy, that is. Well, the real inflection point comes after Trump's deadline and subsequent U.S. action, if at all there is any. If the conflict remains contained and a deal is in fact reached, oil prices are likely to stay elevated in the $100 to $115 range, with supply chains strained but still functioning. However, if the United States escalates this war further, particularly with strikes on Iran's power grid, as Trump is now claiming that they will do, the impact could be far more severe. If that becomes the scenario, oil prices could rise to $120 to even $150 per barrel. LNG and gas prices could surge another 30 to 50%, and power costs could climb sharply. Food prices and industrial costs would follow with a lag, potentially rising 10 to 30% over the next few months. The broader risk is a transition from a price shock to a full supply chain disruption, with implications for global inflation, growth and trade flows.